So a little over 3 weeks ago, I decided to fund a Moomoo account to prove to you you don't need thousands or millions of dollars to get started with swing trading. All you need is a solid strategy. So today we are going to be doing an update on how much money I made or how much money I lost during this 3-week process. So I hope you guys all enjoy it. And if you guys are new to the channel, my name is Carter. I'm a full-time swing trader in the stock market. And with that being said, we do have an amazing school where I teach people my strategies, my mindset, pretty much everything to get started with swing trading, the scanners I use, all that stuff. And right now, only 2 spots left for code GME with the GameStop era. Everybody has been loving this, so we decided to do a fun code GME for a 50% off coupon. So check it out down below. And guys, 2 spots left, so check it out. And we do offer private coaching where if you want more one-on-one experience, check that out down below as well. But guys, let's jump into this. So like I said, a little over three weeks ago, I decided to fund a Moomoo account with $500 because a lot of new beginners and a lot of new traders think that you need thousands of dollars to get started. You need millions to make money. No, what makes a successful swing trader is just base hits and consistency. Those 2 things compounded over the years, that is where your money's gonna get made. So this past week, we grew our account about $30, which might not seem like much. And right now we're sitting near and around $578, which is actually really nice. For 3 weeks, hey, profit is profit. And the only thing that separated me from turning this into $300 or $3,000 was just one thing, and that's account size. The strategy worked, my risk management worked, all of that stuff worked. So now just this compounding effect, and this is why a lot of new traders fail or think they need to have these crazy returns of 30-40% because they don't play the long game. They focus on these crazy stocks with crazy volatility like GameStop, and they try to make money off it, and it's way too risky. So let's talk about the stock here that we traded, and it's actually Amazon. Now, one of the reasons I love Amazon is obviously it's a blue chip stock, so it's very, very well known, and it has this really nice upward trend, as you guys can see. So you guys can see the stock has gone from about $118 all the way up to $191 a share, which is really, really good to see. Another thing that it really loves are moving average lines. So moving average lines are indicators that traders and investors use to get a general gauge of where the market can go in the future by looking at previous history. So with these here, we have the blue and the red. So the blue line right here is what we call the 90-day moving average line. Now the red is the 200-day moving average line. The main difference between the two is just harder support, harder resistance. So you guys can see that the 200, so the red line here, is going to have a way harder support than the 90, but the 90 still does a great job. So you guys can see that it comes in contact with the 90-day moving average line, and this is where we hopped in. You guys can see our cost was near and around, we hopped in actually near and around 176, and so we are super undervalued here, right on the support line. We were undervalued on the RSI, which is the relative strength index, which determines the momentum of a stock here. So the last time it was trading for a 26 on the RSI was all the way back in here where we had this great move. And if we continue to go back, you guys can see that the last point of contact where it was undervalued, we got good buying pressure. So we had a lot of good indication for future growth. Now, the next thing that I always do here after I get a general gauge is we need to plan out the play. We need to plan out the stock. So in order to be like a successful football team, you have to have a playbook. And so you have to know what to do when things go right, what go wrong, just like a doctor or an engineer or anything like that. So, we hopped in near and around, like I said, this 176 area. Now, for me, I actually continue to hold this stock. I haven't sold it yet just because I'm doing a trailing stop loss, but you guys can see that our target price for this is all the way up here at about 190. So we're risking about $1 to make $4.60, which is a really good risk and reward. So what makes a successful trader is focusing on base hits with high quality stocks. Last week where we had this whole GameStop era, most traders try to make money off this. And look at the volatility here, up and down and up and down. It's super, super hard to judge. It's super hard to read, but using indicators, using trend lines, using a variety of things to help us make money. That's what makes up trading, and that's how you be a successful swing trader. So guys, this is just a very, very easy strategy you guys can do. I hope you guys all enjoyed it. If you have any questions, feel free to ask down below. And don't forget to check out our course where you guys can use code GME for 50% off. Only 2 spots left. So check it out. We do offer private coaching as well. So if you guys want that one-on-one experience, check that out. But we'll see you guys in the next one. Take care, like, subscribe, and I hope you guys have a great rest of your day, and take care.